Hi, this is Randy Finney with the Right Side of the Chart, and today is Wednesday, July 19th, 2017. I wanted to do something a little bit different in this video. In fact, this will be the first of several videos. I want to break it down into separate videos just discussing the sectors or industries that stand out to me. If you followed the site for a while, you know when analyzing the S&P 500, I'll often take a look. I like to do a video or static post on the site covering all 11 sectors. This is my watch list of the S&P 500 sectors. These are all the sector ETFs within the that comprise the S&P 500. So to gauge where it's going, you need to look at where the sectors, individual sectors are heading, and I pay attention to the weightings. Obviously, some sectors have a higher weighting than others. On a similar note, I also do that with the NASDAQ 100 or QQQ, the tracking ETF. I'll take a look at instead of the sectors within there, because it's almost all technology. The over half of the NASDAQ 100 are all tech stocks. So as I often jokingly say, the NASDAQ 100 or QQQ is simply a tech ETF with an Amazon kicker. And the reason I say that is you look at the top 5 components, which make up the bulk of the returns, nearly half. The top 10 do make up over half. You'll see almost all technology companies with Amazon in there as a big weighting. So point being, you only have to look at or know where those top 5 companies are going, and that'll almost certainly tell you where the Qs are going. Now, what I'll do today that's different, I'll break it down and not focus on those stocks or those sectors in the S&P 500, but just straightforward, what sectors do I like, which ones look to be promising on the long side, and any that look to be promising on the short side right now. And so that's what I'll do. So I'm going to start out here with energy. Going back for several weeks now, I've been highlighting on XLE, which is the Spider Select Sector Energy ETF. I've pointed out this descending price channel and said that you know, we'll have a buy signal if and when we have an impulsive breakout of this descending price channel. We've hit it a few times since then. I also at the time, going back here, had talked about this would be my one possible scenario and where I'd be interested to start getting warming up on the energy sector down here on this. It's about 63.90, that support level right there. Pretty well defined when you go back in time. And there are potential. We have divergences. I put up another indicator. You might notice I have quite a few indicators up here. I don't always put them all on the site, but I take a look at these from time to time. You know, unbalanced volume. This is unbalanced volume. I'm sorry. The CMF is a money flow indicator, and you can see divergence here on the RSI, the money flows. Almost divergence on the PP. Yeah, we do have slight divergence there. So I will, you know, I've continued to maintain I'm lukewarm. I think XLE, you know, I don't have the highest conviction in it at this point. I can't rule out another thrust down below this level and maybe see prices snap back and regain that level, get back above maybe 64, and once again a definitive break of this trend line. Let's watch what happens there. So as far as risk reward, and this is really going to be the theme of this video, it's the whole theme about trading, at least in my opinion, is you know, what is your upside potential compared to your downside risk. On a trade, you don't want one for one. Yeah, you can set your stops wherever you want, but when I look at a sector, this is one that's pretty beat up. Although if things do get ugly and the market starts a pretty good correction soon, this is the thing. I could see XLE come down and possibly test this level here. So that's why, as I said, I'm cautiously bullish right now. And I can tell you outright, we're not going to get into the broad markets in this video. The risk reward, despite this trend that seems resilient, is about as bad as I've seen it in years. So I'll just leave it at that, and that just means that, you know, the next let's say 20% move in the market is almost certainly going to be to the downside before it is to the upside. That's on the broad market I'm referring to. So there's XLE, a couple other energy sectors. Or energy ETFs within that energy sector. You have XOP, which is oil and gas exploration and production ETF. It'll mirror. So there's quite a bit of overlap in the components. It'll mirror it somewhat, but here's the downtrend line. This is the main downtrend I'm looking, and XOP is still not there yet. You could put in a minor downtrend line here, but I'm not crazy about it. So that gives you a sort of a falling wedge pattern. But again, let's watch this downtrend line. There's a big level. That's why I have it in a different color here, 32.72. Quite a bit of reactions back here. That level acted as support. It acted as support back here. So right now, you know, the technical posture isn't so great on the energy stocks. I know people have been trying to catch a bottom in those for a while. I'm waiting for a little bit more evidence. Maybe a possible selling climax here. You can see on the volume surge. Again, I think downside's minimum, and to kind of show you where it would be, and I'd really become interested in these stocks. If we get down here, this is a support zone, these two lines together. So one last thrust, if we got that in XOP as well as XLE, which would almost certainly follow, maybe go long there and add to bring it to a full position when we break out of that downtrend line. So there's one that I'm, again, cautiously bullish on, lukewarm right now, not engaging that sector just yet, at least the big energy stocks like I talked about. I'll get to solar here in a second, which is a subset of the energy sector. UGA, I mentioned this one recently. I like this quite a bit. This is unleaded gas. I'm sorry, just gasoline. It's a gasoline fund, limited partner ETF. Broke out of this downtrend line, took out horizontal resistance. So that one looks pretty good right now. And that would obviously, if you see gas prices moving up, especially along with oil. Let's take a look at oil. Here's OIL, one of a couple ETFs that track oil. They don't do a perfect job. You want to look at West Texas Intermediate Crude, Brent crude. You can look at those things, but I think WTI is the main one that we're tracking here, and these ETFs go after. So this looks like a bullish falling wedge, although there's not a lot of reactions on that downtrend line, so I'm not too crazy about it right now. You could draw different downtrend lines. You could draw one there. So maybe some work to be done. On top of that, the breakout's not impulsive. You did have a divergent low here on the RSI, divergence on the PPO, and you can see that it's challenging or close to those highs. The lows back in 2016. So again, the theme in the energy sector, oil and gas particularly, is minimal downside compared to the upside. The other thing about these, the reason I'm not stepping in here at support is, you know, oil and gas has been trading in a big sideways range for years. So, you know, the worst thing you can do in a trade is lose money and get stopped out. The second worst thing, in my opinion, especially as an active trader, is get caught up in a sideways grind for months or a year or more. It's just locking up your money and giving you no returns, so, and frustrating you on top of that. So I'm staying away from that one right now, but I am watching it carefully and may start easing into some of those positions. So here's USO. I know a lot of you guys like to trade USO. Again, you can draw different downtrend lines, none of which I give a tremendous amount of credence to or credibility to, because they only have a couple of tags. This one has 3 tags. So this one that I had here first, let's just watch and see if that's taken out. But the bigger picture, again, if you take a step back, here's the bigger picture in USO and crude oil. It's been grinding around now for nearly 2 years, well over a year and a half, in a sideways trading range. Now, if you're adept and skilled at, you know, catching these little rips and dips, you really need to live in the world of the intraday charts to do that. 60-minute charts, maybe 15-minute charts. Maybe you're trading futures. But for swing traders or investors, this is just a dead money trade. There's no other way to say it. So that's that. Again, downside appears minimum, and of course this is a commodity, and it has a, you know, there's always going to be a bottom in crude. Yes, there's a lot of supply problems on the markets, but you're seeing the prices get down to a certain level, and then that's about it. So just one to watch. Probably spent more time on that than I needed to, but I wanted to convey my thoughts because I get a lot of questions on crude oil and the energy stocks, and that's that. Now let's move on to solars. Solar stocks, as you guys know, or if you don't know, back, what was it, early April or so, if I'm not mistaken, I started getting pretty bullish on those. And in fact, I did a video. You know, I figured it warranted a video. I'll show you my watch list. There's a lot of, I have 43 total solar stocks, but these flagged ones down here, so I have a total of 20 that are flagged, and this is what I did the video on a month back, I'm sorry, I believe starting in April, just pointing out multiple bullish setups, and that's something I look for in particularly certain sectors. It's not just a couple handful of bullish or bearish setups here or there, but when all of a sudden you start seeing a lot of related companies developing bullish reversal patterns, bottoming patterns, falling wedges, inverse head and shoulders, cup and handles, whatever you're looking at, and they're all doing so around the same time, then you start seeing them pop, break out, confirm. That's trading 101, and you have to engage that sector, and this is what I'm doing this video for. There's just this has been a market, and I'll tell you, in the last year or two, more so than in the last 7, 8, 9 years or whatever, 8 years this bull market's been going on. The last couple years have been marked by sector rotation. Get in, get out. The market keeps inching its way higher, but some sectors are getting beat up at any one given time, profit taking because they've had a big run up, and then there's other sectors that are doing great. And that's why I'm doing this video. Just let's quit trading the market, trying to trade the market. I'll continue to do analysis because that's what I do on the broad market, but this is where our money's made. FSLR was one of the few official trade ideas, and I want to let you guys know this. I put up a lot of unofficial trade ideas. The reason they all don't make it as official trade ideas, it is virtually impossible. I would need an army of staff to keep up with all these trades. Official trades require posts every time a trade is a target is hit, stop is hit. They require updates, modifications to the price targets. It takes a lot of work. And when you have, like I just showed you, 20 or so stocks that all look poised to run, as we did back a couple months ago in the solars, I'll pick one or two at times, but don't let the fact that they're not official trade ideas hold you back. All right, so okay, we'll go over what's happened, but more importantly, where I'm at right now in the solars. Somebody asked yesterday, hey, are the solars a buy? Again, my thoughts, I said there were buys back here, there were buys along the way as each one broke out. I wouldn't short the sector right now, but I'm finished with it. I think it's gone too much too fast. That doesn't mean it can't continue to go up. Solars, I've traded them for years, and they're, when the momentum's there, these guys can run and run and run and become much more overbought than you think. But what I'm looking at, here's FSLR, for example. After hitting my first target, final target, it consolidated around that level, had another thrust up. This is a long-term, potential target or resistance level, but this thing is getting very stretched, and you can see the divergence forming. There's potential negative divergence. I call it potential because the PPO is still pointing higher. Once that PPO turns down, makes a bearish crossover, in my book at least, that's what I call confirmed divergence, because now you have a lower peak in the PPO. You'd have the same on the RSI if things turn down. Money flows are still positive or bullish when you see the yellow, anything above the zero line. So again, there's not any technical evidence to short this one, but the risk reward is abysmal in my opinion. It's awful, meaning this thing can turn on a dime, and just as these things rocketed up, if and when the momentum players decide it's time to get out of solar, you'll see this thing fall so fast. And so there it is. To try to quantify it for you, again, I talk about risk reward. Let's see, we popped here today so far. So to my next resistance level target, you're looking at about 6, 7, 6.5% upside. Yeah, sounds great. Relatively speaking to this stock, it's not. That's just that stock can easily do that in a day or two. Whereas downside, when the brakes come on this sector, I see about a good 23% downside, and that's where I might be interested in stepping back in. So that just again speaks to the risk reward not being good, although the trend is up, just like the broad market really. A couple more, I'll go through these. And again, these were pointed out back here. There were various trend lines, breakouts, and you can see the gains have been just phenomenal. Like since back in April, I don't know, what is this, 60-something%. Go back to FSLR. I think we were buying it here on the bottom, right off the lows, if I'm not mistaken. So we caught, the bulk of that run, and then it continued on. It's gone up almost 80%. RGSE, again, I'm just going over those start on my list. This one never panned out. This is one of the few that didn't pan out. I had this wedge pattern, and it's just limped down and went nowhere. If I'm not mistaken, I don't think I would have mentioned as a buy signal till over this line. Maybe I did, maybe I didn't. I can't remember where that one was. CSIQ, just beautiful charts. Look at that downtrend line, breakout, back test, everything covered in the videos. We had this pennant formation here, or symmetrical triangle, actually. That's what that's referred to as. Breakout, and then impulsive buying action. This is TA 101. These stocks have just responded to the technicals perfectly, as they should. On a breakout, again, let me highlight, show you what I'm talking about. When you see a breakout of a well-defined downtrend line, you want to see impulsive buying. That's what you saw there. Consolidation in the form of a symmetrical triangle, then a breakout with impulsive price action. What did it do from there? It hit my target. I had this target here, well, probably back in April. And you can see, look at that perfect bull flag, and it's broken out. Now, this flag may or may not pan out. It just, at this point, I don't feel like chasing these. If it does pan out, the measurement would be, the same distance as the flagpole leading up to the formation of flags. So that one, has room to run. So again, if you're in these, you're a momentum or trend trader, just raise your stops. You'll be okay. Just keep your stops raised or ratcheted up to protect profits. JASO looks like it just broke out of that pattern, so that one may run. Again, they'll go until they don't go, and when they reverse, they'll reverse quick. But a couple of these look better than others, like the JASO I just showed you. HQCL broke out above this downtrend line, had a back test, came slightly below the downtrend line, but then moved back up. So that we'll call that a successful back test. But this is a key level, this 773. It's challenging that level now. That's resistance. If it can impulsively take it out, and runs up to 980. But again, remember, if you're watching these, here's how I trade these. Get a watch list, watch the entire sector, make your own watch list. You can look at maybe the components of TAN, but I just put my own watch list up this way. TAN is the ETF, by the way. And then what you want to see is, as a whole, not every single stock, but as a whole, are you starting to see some of these breakouts, like I just mentioned, a bull flag breakout? Are you seeing those fail and reverse and prices move back down impulsively lower? Are you seeing the majority of these stocks start to move down now day after day? Again, not one or two. Trade the sector. You want the momentum, the wind to your back, and that means you need to see the majority of these going up. If that continues, these that I'm showing you that are still bottoming may have some room, so you can jump in. I know some of you are bullish on these stocks now. BSLR, again, pointed out back here, and it's just had a heck of a run like everything else. These stocks, 122%. Almost all the stocks that were covered back then have moved up anywhere from, the high double digits to the triple digits. Here's one about a 90% run right up to my third target. And this is another thing, guys, why I'm lukewarm right now in the sector is I'm seeing quite a few at or near profit targets. This was my final target, T3. There is a huge gap above that level to be filled, but I would be, let's just say, very surprised to see this one power right on through that gap without any sort of reaction. It may backfill that gap, and ultimately I expect it will. These are powerful bottoming patterns. These, longer term, I am bullish on this sector, but near term, again, it's a little too much too fast, at least for me to chase. That would be your first objective buy point, and maybe it then pulls back in, hits that former T2 level. Maybe it goes a little deeper and ultimately powers on to backfill that gap. Or maybe we get, stuck in a sideways trading range for months. But either way, here's a stock which since early April when I first highlighted this one, and I think I might have stated it's a objective long at the bottom of the bullish falling wedge. That one has run up, about 100%. So what are you going? You're not going to book profits at 100%? Or are you going to hold out for 150, 200? Ultimately it might make it up here to that level back there, that resistance or potential target I have around 2063, and that'd be a 250% return. But if it goes there without a significant pullback or correction or consolidation, I'd be really surprised. GLBL, that's another one I covered. SEDG, this one I think was an official trade at one time. And again, just, you know, the way these play out to the technicals, a little falling wedge pattern, breakout, back test, boom, hit the first target. There's your reaction. This is why there are multiple price targets on the site. There are levels that I expect a reaction, that the chances for reaction are pretty good. Went up, hit T2, pulled back. Came all the way back into T1, hit T2 again, because these are resistance levels. Targets are placed just below the actual resistance levels. Finally, it punched up through there and went on, hit T3, and it's continued to rise beyond T3. Of course, all these lines in here are potential targets and resistance levels, but this one is getting a little bit stretched right now. You can see money flows, divergence there. A little bit of divergence on the PPO, not so steep, but it is there, and you do have some recent divergence on the RSI, or at least potential divergence. So if you're long this one, you'd want to watch for a break of the bottom of the price channel. That would be your signal to maybe get out. And if you don't mind stepping in and you know, shorting these for a counter trend trade on a pullback, well, two places. There is resistance right here. It went above that line I had, but I'd be remiss not to put a horizontal line here. You have a reaction high there, reaction high, a gap right here, reaction high. So here's the stock at resistance at the top of its price channel with divergence. So an aggressive trader could put on a short trade here and maybe just target a pullback to the bottom of the channel. Maybe if it does start to pull back, lower your stops to protect profits or break even, and hope for a break of the channel there. Okay, I'll run through the rest of the solars. Only a few more, not all of them, just the ones that I had flagged and covered before. VNPTO, and highlighted this symmetrical triangle pattern here, breakout, and the move has been nothing short of explosive. Unfortunately, I didn't take that one. Hopefully some of you guys caught it. From where it broke out of that flag, that thing ran up 81%. But here's an example. There's a strong move leading up to a bull flag. Bull flag broke out, but all of a sudden it's failed. That's a failed breakout on a bull flag. Not a good sign. So that one, you know, has some headwinds. It had a divergent high. It's not drawn out here. You can see steep divergence right here. Let's just take that flag and show you that peak to that peak against the RSI or PPO and MACD. And that should have also been an indication, hey, this one's gotten a little too ahead of itself. You had a divergent high on the daily chart. Time to book profits or tighten up. So hopefully some of you caught some of that one. Sunrun, RUN. There's another one at resistance. You know, it's had a nice run. Here was a downtrend line. It broke out. Since that breakout, this thing is, it's run, no pun intended, run up 32.72%. You know, it's looking like it wants to make another run at that level, but maybe it pops above it. But again, the risk reward isn't that good. SKYS. Here's one that didn't take off yet. There's a downtrend line. Still needs to take out this downtrend line. It's a low price stock. I'm not too crazy about that one. TERP, Terraforma. Well, here's one that hasn't broke out. See, I think I probably have a price alert set over that line. If it pops above that line, then here's your target zone. And that's, you know, it might not look like much compared to some of the other stocks, but from where it is right now, if it hits the bottom of that zone, you're about a 14% gain and about 18% if it hits the top. YGE finally started playing out, breakout, came back in here, put a nice divergent low, and it's starting to move higher. It's not rocketing like the rest of them, but these are all potential targets, again, if the momentum stays in the sector. ASTI, this one did break out recently. This is a low price penny stock, sub penny. It's a fraction of a cent. Very aggressive, but it broke out, back testing. Where it goes from here depends, again, largely on the sector. 3 more to go. BSRC, breakout, back test, started moving up sharply, falling down again. The way you trade a stock like this, you just see all these little downtrends. You can just put downtrend lines, trade the rips and dips, swing trade in and out quickly. You know, take the breakout, ran up to resistance, you can take profits. Came back in, you could have bought it. Tough thing about buying back tests is you know, they can continue to backtest and go lower and lower and lower. But what you noticed here is during that backtesting process, there was a downtrend line. Once it popped above that downtrend line, right about, let me move it out of the way so I can measure, it ripped up about 78%. So, you know, even if you put a small amount of money, that's a pretty decent return. Here's your most recent downtrend line. If it pops above there, you target that previous reaction high, and that would be a run of about, you know, 80 or so percent. Just remember, the more overbought and extended, and when you start to see divergences on these stocks, the higher the chances start to become that those that break out at this point will fail. Here's CAFD, downtrend line breakout backtest, and then a beautiful rip up. It's consolidating in a symmetrical triangle pattern, sort of pennant shape. You know, maybe it breaks out and hits this next target up here, or maybe it breaks to the downside, comes back in here, might offer a buy or a re-entry at that point. And if not, those are all the other former targets, which are now support. Last one, this is a small, low-price stock, but it is setting up. Again, it's a penny stock if that's your type of thing. And there's positive divergence on money flows on the PPO. There's a line there, a level, and another level right there where it may go to. But again, stay away. You see the Q at the end. Those are usually stocks that are, I believe, that are in bankruptcy. That's that. That's my energy sector overview. Spent a lot of time on the solars just because there were so many trade ideas, and I was doing a lot of videos and updates on those, and I know there's been interest in them, and hopefully this helps out. I'll cover in following videos. I'll plan to cover the precious metals, gold, silver, GDX, cannabis stocks. I've done quite a few videos on there lately, and then I want to wrap up with two other things: the home builders, along with timber, and then commodities, agriculture, commodities, and things like that. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.